Hello friends and welcome to StudyIQ. I am Joycey Joy and today we will be discussing about the recent Finance Minister's decision to rework on personal income tax rates. So we will discuss about the statement made by the Finance Minister. Also we will see what are the proposals given by the central government. Also we will see what can be the possible impact of it, what can be the challenges, and also what should be the way ahead, what should be done. So these are the topics that we will discuss today. But when we discuss these current affair and all these topics, we will be understanding various concepts very important in economics for your civil services examination or any other competitive examination. So we will discuss certain important concepts as well. So this is a very important lecture. First, let us come to the current affair. So coming to the current affair, the Finance Minister had recently said that the government, that is the central government, is considering to lower and rationalize personal income tax rates. So this was the Finance Minister's statement very recently. So this is the current affair. Now, what is meant by lowering and rationalizing personal income tax? It means that the tax rates would be reduced. So what would be the result of it? So here we need to discuss the concept of personal disposable income. Now, what is meant by personal disposable income? I will give you an illustration first, example, then I will come to the concept. Suppose you are a person earning rupees 10,000 and you are paying a 10% income tax. Now, 10% of your income means rupees 1,000. Now, your income is 10,000 whereas you are paying 1,000 rupees taxes. What does it mean? It means that even though you earn a sum of 10,000, you have only 9,000 rupees for your personal expenditure or spending, because 1,000 rupees goes directly as taxes. So this 9,000 rupees is your personal disposable income. So from the term itself it is clear. It is a disposable income. That is the income that can be disposed or spent, or this is your purchasing power. So personal disposable income is a very simple concept which explains to you how much of your total income you can spend on your purchases or for your expenditure. So this is personal disposable income. Now from this illustration it is clear that as the tax rates come down, your personal disposable income goes up. This is because when you have to pay a 10% tax rate, the income that you save in this example is 9,000. Suppose this tax rate comes down to 5%. That is, out of your 10,000 income, you just have to pay 500 rupees as your income tax. So you have 9,500 rupees left with you, which you can use for your expenditure. So 9,500 is your purchasing power in the second example. So as the personal income tax rates come down, your disposable income will increase. Now, the very rationale of the government is to increase the demand, which we will discuss in detail in this lecture itself. Now, talking about personal income tax, this is a form of direct tax. We know that we have both direct as well as indirect taxes, and almost all the indirect taxes are subsumed under the GST except for certain exemptions So all other indirect taxes are subsumed under GST. And we also have direct taxes, which includes corporate income tax and also the personal income tax and several other forms of taxes. Now, the very purpose is to increase the demand in the economy. So these are the important concepts that you need to understand regarding this current affair. Now moving on, let us see what is the announcement of the Finance Minister. What are the proposals? So Budget 2020-21, that is the next upcoming budget, will make changes to the personal income tax rates. So this is the announcement made. So changes will be made in the income tax rates for those who are salaried in the lower and the middle income groups. So within the salaried group, that is among the salaried group, you can find different categories. It would be low income group, middle income group, and also the high income group. So these changes will be brought down for low income group and middle income group. So high income group would be exempted. Now again, how this will be done? This will be done by making changes in the tax slabs. Tax slabs, what does it mean? It means that for every slab, for example, 0 to 2.5 lakh. Again, 2.5 lakh to 5 lakh. This is another slab. 5 lakh to 10 lakh. So different slabs you can find. So in tax slabs, changes would be made. For example, if up to 2.5 lakh, the tax rate is 5%, changes will be made. It would be reduced. So this will be done by making changes in the tax slabs. And accordingly, those having an annual income of 2.5 lakh and 10 lakh, that is between 2.5 to 10 lakh, the tax rate would be 10%. Again, for individuals earning between 10 lakh and 20 lakh, the tax slab would be 20%. So the tax exemption limit, this will be unchanged mostly. So this announcements were made by the finance minister. And the very purpose or the very rationale of this announcements is to boost the economic growth. So we know that the economic growth has slowed down to 4.5% in the Q2 of this financial year. In the Q1 again, it was just 5%. So the GDP growth rate in the economy has considerably come down. So that is why the government, the finance ministry, wants to boost the economic growth, thereby adopted this announcement. Now let us come to the rationale, which is very important. Now we have to consider first of all the background of this announcement. Again, before making this announcement regarding the personal income tax changes, the government already made certain announcement regarding the corporate tax rates. So for various reasons, the government had primarily reduced or deducted the corporate tax rates earlier in 2019. Now the government has moved to personal income tax. So it is very clear that the government is adopting a direct tax reform. Government already adopted a major indirect tax reform through the introduction of GST 2 years back. So GST was introduced as a major change or a reform in the indirect tax structure in India. Now the government is focusing on direct tax reforms. This is very clear from the changes made in corporate tax rates and personal income tax rate. This is because these two constitute the major chunk of the direct taxes. So there is no scope for any further reforms in indirect taxes. Already GST has been implemented. So now government is focusing on direct tax reforms. So let us come to the rationale. First purpose is that by simplifying the tax structure, by lowering and rationalizing, there is a better chance of improving the collections. This is because when the tax rates are low, generally it is believed that in an economy, when the tax rates are considerably low, this will reduce the tax evasion. So as evasion rates go down, what will happen? The revenue collection of the government will increase. So there is a principle in economics which talks about the tax rates and the revenue collection. So it is like this. When the tax rates are very low, we are talking about very low tax rates, then what happens? The revenue of the government will fall. Even though evasion comes down, the revenue that the government will receive will definitely fall because the rates are very low. Again, when the tax rates are very high, what will happen? The evasion will increase. As a result, again the government will not be able to get more revenue or reasonable revenue. So what the government has to focus? Government has to focus on maintaining a balance between high tax rates and low tax rates. So government should try to get a trade-off between the tax rates and the revenue collection. So tax rates should be made balanced and reasonable so that the general public will avoid evasion and also the government get reasonable rates of tax revenue. So this should be the objective of the government. So first objective or the purpose is that when the rates go down, evasion will go down and this will improve the revenue collection of the government, especially the tax revenue collection, which is now under a shortfall, a major shortfall. Now the second purpose, this announcement of the finance ministry will provide an opportunity to rationalize the taxes for different category of taxpayers, and this will also avoid any kind of distortions. For example, in the 2018 budget speech, it was highlighted that in 2016-17 financial year, the salaried individuals, that is those individuals who receive a regular salary, they pay an average tax rate of 76,306 rupees. So this is the annual average tax rate paid by salaried employees. Now, in the same year, the average of the individual business tax payers and also the professionals, working professionals, freelancers, it was 25,753. So, this move of the finance ministry will help in rationalization. This is the second objective. Now, the third objective is to increase the personal disposable income. So, we have already seen what is the concept of personal disposable income. So, personal disposable income is your total income minus net direct taxes that you pay to the government. So, personal disposable income is nothing but the money that you have in your hand for your personal expenses. So, this is the purchasing power of a particular individual. So, this is purchasing power. Now, lowering the tax rates, how this will help in increasing the demand in the economy or increasing the consumption in the economy? Personal disposable income will increase. This means purchasing power increases. So, as a result, the demand, the consumption demand in the economy increases. Now, why this is very important? This is because the present economic slowdown, so it has taken its roots from lower consumption. India, it is a demand driven economy, and when there is a shortfall in the demand generated in the household sector in India, definitely the Indian economy will suffer in terms of GDP growth rate. So the entire cycle of this economic growth slowdown, so this has started with a fall in the demand. So this fall in demand is basically due to lack of investments, but for the government it is very important to take fiscal policies, taxation policies to increase the demand. So here I would also like to explain to you another concept, that is the concept of monetary policy versus fiscal policy. So monetary policy, you must understand that it is a policy taken by the RBI or the central bank of any economy. So this is the first point. Again, fiscal policy. This is a policy taken by the central government of any economy. So, this is the basic difference. Second one, how does RBI take policies? This is made through changes in the interest rates. So, RBI through its monetary policy review can increase or decrease the interest rates in order to increase or decrease or regulate the money supply. Whereas the government undertake fiscal policy mainly through the taxation policy and revenue policy of the government. So these are the basic differences. So here the announcement of the finance minister is a part of fiscal policy, as a part of taxation policy. So this is how the demand can be increased in the economy by keeping the tax rates low. Now let us come to the need for quotient. What are the things that the government should take care and should be prepared for while adopting this move? So first thing is the revenue collection. Rationalization of the income tax of individuals, this is a welcome step. But the government should note the revenue collection position of the government. We have already seen in some previous lectures, we have discussed that there is a serious shortfall of revenue for the government, especially through tax collection. So government is at a point where the revenue collection is very low and government cannot compromise on the expenses. So before going into these points, I would like to explain to you the concept of fiscal deficit. So let us come to this concept, fiscal deficit. Now, what is meant by fiscal deficit? Fiscal deficit is actually the excess of government expenditure over the revenue of the government. So, expenditure is more than revenue, and in order to meet the expenditure, what the government will have to do? Government will have to borrow money. So, this borrowing should happen either from within the economy or from outside sources. So, the amount of money that the government needs to borrow to meet its expenditure targets, this is called fiscal deficit. So, this gap is called fiscal deficit. Now, the government's plan or the target is to reduce the fiscal deficit in a phased manner, and this has been provided in the FRBMA, that is the Fiscal Responsibility and Budgetary Management Act. So, the aim of government is to reduce fiscal deficit, and now from this concept you have to tell me how can government reduce fiscal deficit. So government should either reduce the expenditure or increase the revenue. So these are the only ways by which government can reduce the fiscal deficit. Now we have seen that at present in the economy the revenue collection is falling down. So in order to reduce fiscal deficit, there is just one option left, that is to reduce the expenditure. But that is not rationally possible for a government who has been elected by the people. So government cannot reduce the expenditure to a larger extent. Now let us come back to the topic. Now I hope you will be able to better understand these points once I have already explained this concept of fiscal deficit. So there is a serious revenue collection shortfall for the government. So if the government is again pushing on reduction in tax rates, this will again reduce the revenue collection of the government. That means the fiscal position of the government will be in danger. The government's fiscal deficit will increase. I hope you have understood this because I have already discussed with you the concept of fiscal deficit. So fiscal deficit, there is every chance this will go up. So as the borrowings of the government through the fiscal deficit increases, what will happen? Its debt burden will increase. Also the repayment burden, the interest burden, all these will increase. Now here it is also important to consider the target of the government budget. So the government in this recent budget, government has targeted at a 3.3% of fiscal deficit, and it is very clear that if the government is adopting a rate cut in the tax rates, the fiscal deficit target will not be met. Now what is the way ahead? What the government has to do? First one, government should focus on removing any kind of distortions. Second one, rationalization of exemptions, because in the taxes government provide lot number of exemptions, so rationalization of exemptions are important. Third one, government should avoid complications. For example, the government in the 2019 July budget, the government announced a surcharge for the super rich. So all these things are getting complicated because things will get complicated, a large number of other taxes, so slabs, so all these will make the system complicated. So government should try to avoid such type of complications. Fourth, the government should develop a better institutional capacity to check the tax evasion. Also, a simpler tax regime should be adopted, and it should also ensure that the rates are reasonable. As we have discussed about the concept of balanced tax rates, how this can improve the revenue at the same time reduce the evasion. So this should be the focus of the government, and at this juncture it would not be a right decision for the government to go for a tax rate cut. Rather, the government should adopt all these steps and measures to ensure that the fiscal position of the government is not endangered. Also that the tax revenue collection improves over time. You can find the PDF of this lecture on our website www.studyiq.com. You can follow my Facebook page for more video updates. You can write to me at joycey.studyiq@gmail.com for any of your queries and clarification. Thank you.